Welcome to This Explainer, where we're going to visually unpack a massive, unseen shift that is quietly rewiring global finance. And more importantly, what it means for everyday Americans. While everyone is out there getting distracted by the latest tech headlines or arguing over AI, the global financial system is fundamentally changing in the background. It's a slow, steady rewiring, but the implications are absolutely massive.
To start us off, we really need to look at this surprising number right here, 1992. Because right now, global US dollar reserves have literally hit their lowest level since 1992. And yet, total silence in the media. No breaking news alerts, no market panic. But make no mistake, we are watching a foundational shift in the global economy unfold, and honestly, most people have absolutely no idea it's even happening.
And this brilliantly illustrates that quiet reality. The math just doesn't lie. Look at this. The dollar has slipped from being the dominant 71% favorite back in 2000 down to 66% in 2010, and now it's sitting below 58% today. I mean, for over 70 years, most of us just assumed the US dollar's dominance was a permanent fact of life, like gravity or taxes. But mathematically, that dominance is fading right before our eyes.
Part 1. America's exorbitant financial privilege.
So the crucial point here is that by acting as the mandatory middleman for global trade, the US has essentially secured the ultimate financial cheat code, and it's built on 3 pillars. First up is intelligence. When a trade clears through correspondent banks in New York, it gives the US a complete bird's-eye view of global trade data. Second is investment. Because countries literally need dollars to trade, they are forced to buy US Treasury bonds, which means a constant stream of cheap capital for America. And third, jurisdiction. Running trades through U.S. infrastructure gives Washington the supreme regulatory power to act as the ultimate judge, right down to freezing assets. This isn't just a system for global trade, it is infrastructure built for global control. Now, what's really interesting about this, and what you might be wondering, is how this impacts you directly. Well, the U.S. saves an estimated $200 billion every single year just from this setup. But if the rest of the world stops needing dollars to settle their trades, they're going to stop buying U.S. bonds. And when global demand for our debt drops, the U.S. has to offer higher interest rates to attract buyers. That means higher borrowing costs ripple through the entire domestic economy. We're talking higher rates on your mortgage, your credit cards, basically the whole shebang. Let's shift gears for a second. Part 2, the central banker's dilemma. I want you to step into the shoes of an international central bank policymaker for a minute, just watching this American financial power flex over the last 2 decades. Let's see how this anxiety builds. In 2008, the Fed's quantitative easing really sparked the first major fears about being too heavily concentrated in dollar assets. Then, by 2014, U.S. sanctions on Russia prompted a serious push to find alternative systems. But the real game changer? 2022. The U.S. and its allies froze roughly $300 billion in Russian sovereign assets and completely cut them off from SWIFT, which is the messaging network that basically runs all international banking. Seeing the SWIFT network just turned off for another country forced every single foreign central banker to ask themselves one exact terrifying question. What happens if Washington decides we can't use dollars either? Regardless of how you view the politics of the 2022 decision, it sent an undeniable signal. The financial system you completely depend on can be switched off in an instant. Ironically, exercising that regulatory power actually weakened American geopolitical leverage because it basically forced the rest of the world to run for the exit. Which brings us to their response. Part 3, BRICS and alternative infrastructure. So their response wasn't just to sit around and worry, it was to start coordinating a massive backup plan. This perfectly contrasts the old system with the new. Under the old system, if Brazil and China wanted to trade, they literally had to route it through a New York correspondent bank. Every single payment touched American soil and fell under U.S. regulation. But the new system? It relies on blockchain-based cross-border platforms like mBridge, which just went live in 2024. These are alternative pipes allowing for direct, bilateral trade. No JP Morgan, no Citi, no U.S. oversight. That systemic intelligence advantage the U.S. enjoyed is just being completely bypassed. And this isn't some small, exclusive club anymore. The 2024 BRICS expansion essentially unified half the global population to build these non-dollar trade routes. We're not just talking about Brazil, Russia, India, China, and South Africa anymore. By adding major economic players like Saudi Arabia, the UAE, Iran, and Egypt, BRICS now represents over 25% of the global economy. Individually, these nations couldn't easily challenge the Western-led system, but together, they're actively creating the infrastructure to just play by their own rules. Now let's look at the actual tools they are building. Part 4, the rise of the unit. Okay, let's dive into the unit because this is honestly the single most underreported financial story of the decade, and it just moved to an operational pilot in early 2026. The unit is a blockchain-based settlement tool custom designed for BRICS countries. It operates as a completely neutral unit of account, and get this, it's backed 40% by physical gold and 60% by a mix of BRICS currencies. So in plain English, it's a direct challenge designed to replace the role of the US dollar in international settlements between these allied nations.
So the crucial point here is that the unit's goal isn't just to, replace paper dollars. It's a calculated, step-by-step attack designed to break America's invisible monopoly on global commodity pricing. Think about it. One of the dollar's deepest powers is that commodities like oil aren't just paid for in dollars, they are priced in dollars. The dollar is the global reference point. If the unit can successfully price commodities outside of the US system, it completely shatters America's monopoly on global price discovery.
Part 5. Optionality kills monopolies. When you zoom out, you realize the unit and BRICS are just parts of a much larger global trend of shifting away from dollar reliance. Look at these shifts in action. Central banks have been buying physical gold at a record pace since 2022. Brazil and China are already settling bilateral trade in yuan and reals. India is buying UAE oil in rupees. Even Saudi Arabia, the absolute linchpin of the 50-year-old petrodollar system, is openly discussing accepting yuan for oil sales. Now, no single auction here kills the dollar overnight. But together, they create the one thing the U.S. financial system has never had to face: real, viable optionality. And optionality is absolutely fatal to a monopoly. The reality of global finance is beautifully summed up by this idea. Nobody chose the dollar because they loved it. They chose it because there were no other options. The dollar's dominance wasn't built on affection. The entire correspondent banking system, the data advantages, the regulatory choke points, all of it relied on the simple fact that there were no other functional pipes to route global transactions through. The world used the dollar because they literally had to.
So I'll leave you with this final thought to consider as you watch the global financial system quietly rewire itself in real time. For the first time in 80 years, real options exist. Is the dollar's monopoly already over? When a monopoly finally shatters, the ripple effects are felt in every corner of the global economy, right down to the interest rates in your hometown. Keep a close eye on these quiet shifts, guys, because the math is changing fast. Thanks for joining me on this explainer.